Micron delivered strong results in its most recently completed quarter, and the Wall Street analysts that are following the company were curious about the reasons why the company outperformed its expectations. So, Micron's management team did a great job explaining what led to the company's outperformance and how they feel about their prospects going forward. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Micron's management team saying that in terms of the 8 high to 12 high, which is their next generation product going from 8 high to 12 high, you can imagine the 12 high is a more complex product and also has impacts for all suppliers as they move to higher number of layers. And consequently, the price is higher, not just because of the 50% extra capacity, but the price per bit is also higher because of all of those reasons. So in other words, Micron telling investors that it outperformed because not only is this next generation technology embedded with more content, but also the price per unit of content is also higher. So they're selling more units, if you will, right? It's not exactly like that, but I'm just trying to simplify it. They're selling more units, and then each unit is priced at a higher average price per unit. And so they're getting the double benefit of that impact, and revenue is increasing faster than the company thought because more businesses are employing this next generation technology sooner than Micron expected. Micron expected there to be a slower ramping up process of enterprises switching to this technology, but it turns out they're switching to this technology faster than Micron expected, which is good news. So the company's saying that they feel very good about where they are right now with the high bandwidth memory 8H having outperformed their prior plans, and that their manufacturing experience and base bodes well for the 12 high ramp that's coming for the rest of 2025 and into 2026. And that's great news for Micron stock investors. Because remember, one of the bigger risks for Micron has been that the company spent so much money on this technology upgrade and manufacturing expansion. Over the previous 12 months that ended February 27th, 2025, the company spent $7.261 billion on capital expenditures. That was more than double the $3.18 billion they spent during the same time the prior year. And that's nearly all of the cash flow the company generated in that time. The net cash provided by operations totaled $7.186 billion, and they spent $7.261 billion on capital expenditures. So this generation of upgrades was playing an extra important role for Micron stock investors, and it's good to see that the initial results are coming out better than expected. So the risks from these elevated levels of capital expenditures, in my opinion, have been diminished considerably given the early results that Micron is seeing from adoption from its customers. They went on to say that they're very pleased with our progress on being able to provide more supply and even greater supply than what our prior plans were, right? So they were initially planning on supplying a certain amount, but now that demand is much better than they expected, they're going to supply a greater amount than they previously thought. So that's great news. That means higher revenue for Micron, which means higher profitability because they're going to be able to employ a larger percentage of their overall capacity and thereby reduce the cost per unit while also increasing total revenue. So in terms of that greater opportunity, management said it's been a combination of more robust demand for their latest generation technology, which is 12 high, rapid and a robust shift to 12 high earlier than they expected. And as we've said now, most of the second half calendar year will be 12 high, and that comes with higher ASPs, which stands for average selling prices. So the higher shipments from us are enabling us to continue to keep our market share despite the higher total addressable market. So what they're saying is we're still going to have a similar market share as we did before, but now the total addressable market is going to be much larger. And so their revenue is going to be much larger. So it's like if previously they were getting 1/4 of the pie, and now they're getting 1/4 of the pie still, but it's going to be a bigger pie that they're going to get a 1/4 share of. And of course, that's great news, right? If your market share is staying the same, the overall market is growing larger. That means you're generating more revenue. And that's what you like to hear as an investor. So they see the HBM market, high bandwidth memory, continuing to expand over the years. And they've even talked about a $100 billion trajectory by 2030. And they also want to remain disciplined about their investments. And of course, they have substantial CapEx that we have committed and that we have told you about. And that's the number I showed you earlier. That's $7.26 billion over the trailing 12 months, which was more than double what they did in the same time the prior year. That's the significant capital investment that Micron made. But don't you love to be able to make that capital expenditure and then realize that, oh my goodness, the market is actually larger than we initially thought. So we're so grateful that we made those plans to invest that capital expenditure, and we're going to be prepared for this larger market and generating more revenue because we have greater manufacturing capacity to serve that market. And so you might be seeing this and saying, yeah, that's all great, but why did the stock decline after the company reported these results? And I was just as surprised as you might be. The initial reaction, I remember when Micron first reported their quarterly results, in the hours in the aftermath, the stock price was up 6 or 7% following their earnings release. And then on the day after and the days after, the stock price entered into some volatility. And it's my opinion that that was more broadly related to these macroeconomic concerns, increasing tariffs, which are increasing the risks for a recession. And that's creating uncertainty from investors. And one of the areas they're going to pull back from is a very cyclical industry that Micron operates in. And so you can see investors pulling back from a company like Micron. But in terms of their actual progress, I thought they did a great job in the most recent quarter and in the most recent 2 years, preparing for this upturn, this upcycle in the semiconductor industry that's being driven by the rising effectiveness of artificial intelligence. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.